Euro dollar, you can see that we've got a big red candle forming here. We've come to a previous level of structure in between these two levels, and we just broke this shelf right here. We're gonna go down to the 4-hour chart. And again, you're gonna see a lot of this on a lot of pairs you're looking at. Broken close below this recent previous structure shelf right now, coming down into our next level of structure support. And it's kind of a tiered level, right? You have a level right here. You got a level right here. You got a smaller level underneath of it and a smaller level right here. So from the continuation standpoint, really no interest in a continuation down, seeing how we're currently at a previous level of structure. However, what you could look for is some relief, right? We had a big move. We went all the way from, really to start this candle, 106.60s down to 105.40s. If we are going to get some relief, if the market is going to kind of shake off this move, we may see a move back up into this previous level of structure support, which should now act, or we would now expect to act as potential structure resistance. So we could look for maybe lower time frame potential pullback trades, or not pullback trades, reversal trades up to that level. We're seeing some rejection down here. Let's go down to an hourly on the euro dollar. We're going to see a clear picture of, we're starting to see, obviously we have our high momentum move coming down here. We have our loss of momentum. You can see the slope decreases. We have our nice doji candle right here, indecision, and we're currently on the hourly printing a higher high, higher close. Still about 12 minutes before this happens. But if you're an aggressive trader at this level, RSI overbought as well, oversold, I should say. What is this thing on my chart? I have that stupid headlines on. I forgot why I put that on. But if you're an aggressive trader, this would be your first sign to get involved in a trade. Again, I think a good level to shoot for is our previous level of structure up here. If we had our Ninja Trader charts up, you're going to see a nice little VS1 level right there. In fact, a handful of VS1 levels overlapping. Be interesting to see. I think we're going to be a little bit shy of a 382, but let's bring a Fibonacci retracement from our swing high to swing low down here. We're going to get a 382 in that zone, so not quite at the bottom of that zone, but right in the middle of that zone. What you can start doing is you can start looking at risk-reward opportunities right here. Now, I would say if you're taking a higher high, higher close, if you're just shooting for the 382 at the bottom of that VS1, risk reward is probably not going to be in your favor. We're going to have a bigger than usual ATR, I would expect, because of these big candles. So our ATR is currently about 25. So if we're doing a 1 ATR stop, right, we're looking at 105.18s minus 25 is going to be what, 93s? Again, might be a little bit rusty on the math here. It's been a while since I've been on the charts. But we're looking at a stop loss down here with an entry, let's just say right here. If we're looking at a target at the low of our VS1 level, we're certainly going to be in a situation where we have a less than a 1-to-1 risk reward. So two opportunities here, or two ways to handle this. One, if you're shooting for a higher target level, right? If you're shooting for a higher target level, then obviously that may stretch that risk reward out if you're shooting for like 106 flat or something like that. Two, you can look for an alternative reason for entry, right? So maybe instead of taking the higher high, higher close, use a more conservative reason for entry, wait for a potential double bottom. What that double bottom may do, and I say may because we don't know for sure, what it may do is it may give you a better entry, a little bit lower in the zone, right? Again, stops don't move, potential targets don't move. The only thing that moves is the entry. And it switches your risk reward around from what was a -1 before to a +1 now. So that's something that you can pay attention to or wait. And that's one of the values of having kind of multiple strikes in the market. Pound dollar, right? We're already a little bit advanced, right? So what's happening on the pound dollar right now is what we were predicting to happen on the euro dollar. So maybe we'll see some follow through there. But pound dollar, similar situation. We look at this on a daily time frame. Again, bigger picture. The most recent move on the pound dollar was a violation of this previous level of structure. We got some overlapping levels of structure that we held at, but we're seeing a dive down and a move back down to more multiple levels of structure. One right here where we currently are sitting at, and then we have another structure level lower as well here. We take a look here at the 4 hour. You can see again, just like the euro dollar, pushed past this structure shelf, came into our previous structure lows here, found some support, and now we're reacting off of it. So a little bit of a different reaction. Didn't get the same type of doji candle. We did get an inside bar here. And then we ended up getting a break of that to the upside. So the same prediction would be, hey, we're likely to continue back up, a little relief here, right? Selling pressure kind of slowing up, buying interest coming back in the market, whether it's from new buyers or people that are taking profit. And we see a move back up to our previous level of structure before the market sort of makes up its mind on, hey, what do I want to do next? And we can take a look at the 15, see if anything interesting here happened. I'll show you something cool on the range bar chart as well. So 15. So again, just as we are looking for on the 15-minute chart, here's a perfect example of that secondary reason for entry, right? So we looked at this on the euro dollar, but if we looked at this from the first reason for entry, right? We have our doji here, we have our higher high, higher close, right? Entry would have been right here. Again, targets, we're looking at a retest of our previous structure lows, maybe 50% Fibonacci confluence in there as well. Oh, baby, look at that. Right under the 120 even handle. Stop loss would have been, this is a 15-minute chart, 17. So let's get below here. This is what? 119 even. Okay, so 119 even, that's going to be 83. So looking at initial risk reward like this one was a little bit better because that previous level of structure was higher, so about a 1.3 to 1. But again, if we're looking at this from, hey, the secondary reason for entry was instead of taking the higher high, higher close, whether the risk reward didn't work or you're just being conservative, is waiting for the double bottom. Once again, stops don't change. No, maybe they change a little bit. Maybe the ATR gets a little bit smaller, but stops don't change in general. Targets don't change. Only thing that changes is the entry. Our official double bottom would have come right here, it looks like. And you're looking at a trading situation that looks like this in comparison. So a much better risk reward waiting for that double bottom. Now, we haven't gotten to the target yet. We did come to 382. We haven't gotten to the target yet. So you could still look for a 2618. And again, a 2618 could be a trading strategy in its own right, could be another alternative entry reason. But we're looking for price action to come right back into that double bottom for the retest, the first pullback, and then looking for one more extension up, retesting the previous high right here, and then potentially extending to the 127 or whatever structure level you have on your radar. So pound dollar doing what we were looking for, what we're looking for euro dollar to do.